What's up, guys? It's December 22nd, 2023. By the time you guys see this video, Christmas would have passed by, so I hope you guys had a good Christmas and you guys are ready to study. We got like 4 or 5 days to the New Year's, and then, yeah, another year of trading. It's gonna be fun. It was a pretty tight range most of the day until the end of the day. There was a breakout and a reverse, so that was good. First 6 bars of the day were more bullish. We have a gap up, and then bars 1, 2, 3, 4, 5 are all bull bars. However, they're shrinking. They're getting smaller with lots of overlap. This bar is a breakout bar, but not by much because it overlaps the previous bar by a lot. Bar 5 is a turning point, and I think bar 6 is the start of a bear channel. Well, bar 6 is the start of a bear channel. Right down here. I'm gonna delete that line. Would be bar 12 being the breakout. Bulls have micro gaps open right now. See a gap here. These two gaps are the same thing. This gap, we draw this gap here to represent this bar. So this is a big bar, like that. And then this breakdown, excuse me. And then this gap shows that it's the inverse of each other. So this green gap is showing how this bar can be treated, how we treat this gap up. This bar is showing how we could treat this. That was a little confusing. This gap up is like one big bull bar. This gap up is showing us that bulls are buying here and here. So we're measuring strength. See how bears get a gap down right here, and it gets tested. It gets tested with bars 23 and 25. This kind of started to look climactic after it failed here. Bar 12 could be a second leg, and then bar 15 is a third leg and a pullback. It's a pullback for this bear channel, and it's a third leg failure for the bulls. We have a big bear channel right here. Excuse me, not a big bear channel. These channels are tight. I meant big in relationship to the previous bear channel. The bear channel is getting wider. This could still be the starting point, something like that. Something like this. There's many trend lines, so I don't draw all these trend lines. I'm just looking like minor support and resistance. I'm trying to train my eyes. See, and then bar 6 was the break. Bar 18, the bears put in a gap bar through the EMA with some follow through. The bulls get 2 legs up and the bears get 2 legs down. I thought this was a really cool pattern to see. 2 legs are pretty much happening across all the time frames, and we can read that through the wicks and having a market imagination about what's going on bigger time frames. And what I mean by that is, on the 15-minute chart, this is 1 bar, and then they have 2 bear bar pullbacks, and then this is another set. So on a bigger time frame, leg 1, leg 2, on smaller time frames, like the 5-minute, we have a leg 1, leg 2. Bar 20, bar 20 to the, maybe we do here. Yeah, because that's where the pullback starts. It ultimately wasn't a good trade because you'd have to hold through a two-legged bear pullback. But the PT does get hit if you put your stop down here. You actually don't get tagged out, and it actually does not get hit. So this is a failed 2-legged pullback by the bulls. And the bears get their 2-legged pullback. Right here is where I'm looking. Something like that, or you can go like that. It's maybe a little bigger move. The micro channels I'm looking at are right here, and this kind of creates a bear flag. Like that. There's a lot of patterns. This is actually a bull channel right here, and that has a double top. So we can see like the double top bear flag, and that led to 2 legs down. Market cycle somewhat resets when it goes into a range, and a channel is a range just slanted. So the market cycle could be resetting. Breakout in 2 legs, failed third leg here. Range bound, we're at lows, and then overall, all while this is going down, the bears are getting a bigger time frame. The 5-minute 3 pull. All while this is going down, this is becoming leg 1, leg 2, leg 3. And these legs aren't symmetrical. This is smaller. This is a little bit more climactic, and this was a drift down. But it is 3 legs, because here's one leg, channel line break, new low, channel line break. Failed to break this bearish market structure on bar 18. There's resistance here. And then we had another channel line break to go down here. So leg 1, leg 2, leg 3 into support. The support's getting weaker, I think. I actually don't measure support when I trade, so I'm not going to say it like that. The support has had 3 bounces, and the bears are getting better closes. That's better. See how on bar 19 they tried to close below bar 1 first time and they failed. Bar 33 did close, and now they're getting a little bit more bars up. 35. They're getting more bear bars below the low bar 1. Bar 36 is bar 36 is a reversal, and it's a bull flag. Here's a bull flag. Here's a 3 pushes down, or you can say 3 pushes down here. It's a triangle breakout pattern. We have a reversal below the low of the day, and we are trading above yesterday's high. So I was a little more bullish at this point because we're trading above yesterday's high, last week's high. We've been pretty much in a bull run for ages. So all while these legs are happening, they're also happening with a bigger time frame market cycle. This could be a range right here, because we have a double top and a double bottom. Double top, double bottom. It would be perfectly normal to just sit this out and wait for a 2-bar breakout above this resistance or below this support. The breakout eventually worked for the bears, and we got a range day. It looks like the open became a magnet. We had a quick move lower, and I kind of counted this as leg 1, leg 2 as well. Leg 1, leg 2, and within this leg 2, there's fractal leg 2s. So leg 1, pull back, leg 2, and then we can even see a falling wedge here, giving good context for these bars between 56, 58, 59, and 60. So we could say maybe leg 1, this is a spike, pull back and channel, first push down, second push down, third push down, fourth push failed breakout on last week's high, and the market surges back to the open, because now we've had a big up move and a big down move. The day is now a range day. I mean, it technically was a range day all right here. However, the first 6 bars didn't do a good job at telling us, but they were getting weaker, and we were at highs. This pullback failed, and we had gap bars below the EMA. Once we started to get gap bars below the EMA, I think it's good to just get out of longs. If you're long and you see gap bars below the EMA, so this is a gap bar. This could be a gap bar between. So if I delete this, then these 3 bars, so something like that, that's a gap. So the bears are putting in gaps. Let me delete that and make a new gap. From here to here's a gap. Here to here could be a bear gap. There is a difference between these gaps. This is in one of Ali's videos on YouTube. I can't remember the title of them. He has so many. I'm going to change the color of this box and just... There's a difference between these 2 gaps. The difference is this gap, this is a bear gap. I painted it purple so you can see what I'm talking about. The purple gap is still on a bear bar. However, there's a bull bar above it. Okay, so and this gap is also a gap. However, this is a downtrend with 2 bear bars, one above and one below. So the gap, it has a different context. This is coming from a downtrend. This is coming from a support. This is like a breakout continuation, because this is a range. Right here is a very, very small tight range. It's a bear flag double top, really. Oh. And then on range days, gaps get closed. And all these gaps I just drew over here, got closed right here with these bars. Bar 62, 63, 64 took out these gaps, and they pushed back into the high, and the market started to consolidate above. This is pretty bad. We got the open, we got the EMA. I was done trading. I stopped trading pretty early. This is a sandwich. We got last week's high, bigger time frame EMA, yesterday's high, 5 minute, and then the open. The open can be a magnet. So lots of channels, lots of gaps. The market cycle to me was trend, range, trend, range, trend, range. This is a leg in a range, and then as soon as we broke out, it became trending, found support, we went back to ranging. This could be a breakout because it's a reversal with good follow through. So maybe right here. That was my mouse. That circle was not. I swear my mouse did that weird stuff. That was me, but the previous one. All right, we're gonna go to the. So daily time frame, we can see the pullback and the lower high getting put in. Right here, lower high. That was bad. Lower high. Here, we're right above last week's high. Maybe they start to fall until last week's 50% level as the EMA meets it somewhere. This was a very strong bull run, but we are long overdue for a pullback, and this definitely changes the outlook for the. I think that bar really makes 3 legs obvious at like 1, 2, pullback, and then 3. So just based off how we treat the 5-minute and third and fourth legs, that we could be going to a range. The market cycle could be changing because third and fourth legs are usually better fades. So we'll see what happens if we get higher. I mean, today was actually, today closed below. No, today closed. We closed on the open, right? Yeah, we closed right below the open. So yeah, it'll be interesting to see what we get at the end of the year. 4 trading days left. I hope you guys got a lot of presents, ate a lot of cookies, and drank a lot of wine. Have a good night, everyone. I'll talk to you tomorrow. Bye.